So a brief description as to why short US30. In the meeting, we talked about the W formation, if you recall. Let me put it to a clean chart. So there's the W formation. We were talking about a target to the 61.8. Now, what's happened on the back of that data is that well, first of all, I've put my target slightly below the 61.8. I'm targeting this sort of gap area. Right, okay, so the data, what happened was we got traders trapped. Right, so this is the New York session, this is the Wall Street Open, the grayed area. And we had traders that were trying to go long, and they got trapped essentially. And we've come back up into that resistance area, the point of control for the day, volume profile. We've come up into that, and we've moved away strongly. So theory is trap traders or those that went long were selling to get out of their long position as the market came up. So that potentially gave the fuel for this move to the downside in the 5-minute chart. So that's the thesis, guys. That's the thesis based on the data and prospects of a continuation higher in the dollar, just as we're seeing now. Yields following suit. So bearish for the indices. Asymmetrical risk to reward, targeting last week's lows, slightly above there. 61.8 could be an important level on the way down if this continues going down, of course. And stop above this resistance and that, what you call it, area of fair value gap. Prospects of a continue lower. So this was a setup because it was at the high of the day, right? This is the high of the day. Unlike the S&P and NASDAQ, you'll be selling. I mean, they could continue going lower. I mean, look, contemplated it, but thinking twice, no, this is selling at the low of the day. We want to be selling at the high of the day. So that's why the US 30 was more favorable.